Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, February 10th, 2023. It's 10:08 Eastern Time as I'm getting the video out, or I'm starting the video, I'm sorry. Only half hour or so into the trading day, but I wanted to get this one out. Lots out there right now to highlight and talk about. Let me start out with the indexes, the sell signals that we have right now, and my comments this morning. And I just want to say that I'll get to the short-term charts in a second. Usually I don't even post short-term trades that when I'm actively trading. I'm just trying to thread the needle here, and I think, well, like I said, I kind of just smell a little market manipulation here, but I wanted to make very clear, as I think I did in that post this morning. I plan to, I told you, started scaling into some swing shorts, and didn't think it was an all-in time, but I will be adding to those shorts whether we rally today or not. The case to be short has only increased recently, and we'll see how we close the day, but I think it would take a whole lot to convince me not to add, and I would prefer to add on strength. I would love to see that little false breakout. And let me show you a couple scenarios and some things to look at. And again, the takeaway is watch these levels. Anything can happen. I'll tell you what I think is most likely to happen, what I'm doing, and then I give you the levels, and you got to watch them because the market, I'll tell you, when volatility expands, the VIX is broken out, things can and often move very fast. And remember, there's a lot of nefarious forces out there in the market, including but not limited to the algos, algorithmic trading programs, high-frequency trading, big trading desks, market makers, and the likes. And then again, maybe it's just the nature of the markets that they have to fool the most of the masses. So in order to to not make it easy. If everyone was making money, it would be everyone would just have all their money in the market, and nobody would work. So the market takes away from most, and gives to the few that really can master it. But what I wanted to show you here is go through these PPO crossovers, and I'm going to also address right now, you know me, I like to go on my little tangents. There was a question put to me, I just saw this one. From member Trade 39, who asked a question, an educational request about a trading system using PPO crossovers and some other things. And let me just reply here because this might benefit everyone. I've been doing trading professionally for a living for decades now, and early on I did experiment with those automated trading programs where you can enter all kinds of criteria. RSI strength, PPO crossover, moving averages crossovers, just about any indicator combination thereof. But here's the takeaway, what I've learned. I kind of got away from that, and I am a mechanical trader. I mean, this is what I do. You listen to my voice, I'll tell you, I kind of read the charts. Sometimes I dismiss an obvious thing, such as these breakdowns, for my active trading accounts. This is a 10 on a scale of 1 to 10, but my gut tells me they may try to shake some weak-handed shorts, like I said, out of this. Maybe not. But this is a great time. And again, to me, I just want to make clear, it's a matter of if we bounce, I don't think it's going to go very far. I'll show you some levels to watch. And like I said, swing shorts I already have, and I'll be adding to those in those accounts. Active trading, I already had one pop that I got out. I'll pop back in. I'll get to the short-term charts in a second. And let me just show you some of the things and go back to what I was talking about with the automated trading systems. Here's what I've learned. You back test these things and they work great. You tweak, find the right parameters. All of a sudden you run a back test and it's got this 80% ratio win rate and great returns, and because you are retrofitting things. But what you're doing is you're those back testing things. You're looking in the past, and again, if you tweak the numbers on any, you'll find a system that worked in a certain market environment, and that system may work again. But here's my takeaway. The most important thing is, and I've learned over the years, to first and foremost recognize what type of market you're in. In other words, the trading system that was working here, selling these kickback rallies and trading this trend, doesn't work right here. You get chopped to pieces, and that's where you get back a lot of the profits. So where I'm going is, learn not only to recognize what market conditions you're in, and then if you are doing those automated trading programs, great, but you're going to have to switch. You're going to have different programs and different rules for different market conditions and different securities. That's number one. And then also over the years, I've learned to, and think I do a pretty good job of anticipating, these when market conditions are going to change before they actually do change. Recognize when you're likely to consolidate after a big run and maybe chop around for a bit. Learn to recognize when you might break out when you have a well-defined trading range, and then you break. You look and at this end of the trading range. I talked about it throughout last couple of years when we've had these trading ranges. The MO is to buy the bottom and then sell the top, meaning get out of your longs and or short and wash, rinse, repeat. But when it gets to a certain point, I stop doing that and I look to position for a breakout, and then I'll share which way I think the breakout's going to go, and then that's the way I position. Wait for the breakout and stop buying the bottom of the range when the breakout's likely, because as I often say, no trading range lasts forever, no trend lasts forever. All right, so that's the takeaway. Is that's fine. I don't do mechanical systems. I'm just an old-fashioned tape reader, a dying breed, a dinosaur. But I just kind of read the charts and react. And I also trade multiple time frames. And again, I'll share my thoughts as a swing trend trader. And if your wheelhouse isn't active trading, day trading, don't try to do those. You're just going to get chewed up and spit out. Cut your teeth by trading the daily and weekly time frames and maybe the 60-minute charts, and then you can when you get your skill sets and your confidence is up, then you can more actively trade. And when I say actively trading, what I do there is those are larger positions in and out. I'm trying to scalp a percent, 0.5%, sometimes 2-3% on stock futures or whatever else it is I'm trading, whether it's Bitcoin or gold. All right, so back to the charts, and then I will wrap this up. Breakdown. That is a sell signal 110%. Any back test of the trend line is also an objective entry. It's an objective entry right now where we're broken down. And then what I wanted to point out, and this also goes to the trading system. See, it's been, and I've highlighted this many, many times, it has just been, a goose laying a golden egg for you. Just looking at these PPO crossovers alone, you would have done great. Just looking at the high-level PPO crossovers and then getting out of your longs when those occur, and or getting into shorts. But then I add other things. I look at trend line breaks. I look at overbought readings, divergences, rallies into the moving averages, rallies into the downtrend lines, all that coupled together. And I just wanted to point out that's what we have. So we have a very solid sell signal. There was a last high level, above the zero line, bearish crossover right there. So 1, 2, and now we didn't cross yet. Very close, but it looks imminent. Sometimes you look like you're going to cross and the lines bounce. And again, one of the things is, here's the problem. Here's the hesitation in my voice. This almost looks too easy. Okay, there's a few other reasons I'll show you that I think might be a little whipsaw head fake here, and so therefore, like I said, I at least in the active trading account, I'm going to bet against it, and then I'll wait and see at the end of the day. Let me show you what I'd like to see to add to some swing shorts and take home over the weekend. But once a pattern becomes very clear to all, that's usually about when it stops working. So I'm a little less, like I said, it's on a scale 1 to 10. It appears to be a 10, and it may be a 10, but then there's that little thing. I'm not a mechanical trader. You read all these people post trading rules, just read the charts, take the signals, don't second guess. I do that. If you're, let's say you're, a military commander and you take your unit into a town in Iraq and something doesn't seem right, your gut tells you don't step into that alleyway, don't step into that building. Maybe there's an IED. Follow your gut. That's kind of what I do with trading. And so, in other words, this just seems almost a little too easy right here. But the PPO crossover looks imminent. It's just, are we going to get it today? And if we do, then hey, take it on face value. That's why on my swing accounts, I have some shorts, but I'm going to hold off. I think we'll get a little pushback to add to those. So that's a lot of talking about something that, again, it looks so obvious. That's the problem. It's almost too obvious. And SPY as well. S&P 500, that's not my board. There's the board right there. There's the uptrend line, the minor trend line right there, breakdown. There's some price support there. And look, the PPO crossover right there. Again, it appears imminent. Any more downside, you'll get it. But like I said, I think we're going to probably get a little fake out move here, and I'm going to show you how high it could go. Let's look at the shorter term charts. Oh, one more I wanted to show you, and this is another reason to pause here on the small caps. Covered the RTY I told you, and NQ shorts this morning. This is a 60-minute chart. I need to extend this downtrend line. I'm going to show you the daily here in a second, but you have a primary downtrend line right there that was recently taken out, and so on the small caps there's a breakout. And then we did take out this 60-minute uptrend line yesterday, but now we back tested, and there's big support right there. So the small caps had a breakout of both the downtrend line and price support. Again, this is a 60-minute chart. You can see all these recent reaction highs, 1, 2, 3, 4. Finally, the breakout, and so you have a confluence of support right there. The back test of the trend line. Probably see that on the daily as well. The trend line I had on that 60-minute chart was this one right here, coming in, back testing that trend line, and that big 189.50ish resistance. So glass half empty says, look, solid breakdown, bearish PPO crossover, just like you had here, just like you had here, just like you had there, just like you had there, and you can see what happened each of those times, and maybe that'll happen now. Or we get a whipsaw, and that would be an ultimate bear trap. And that's where, like I said, it's just my instinct. I don't want to walk into a bear trap right now, so I'm kind of holding off the moment for adding any swing shorts. I'll let you know later today. I probably will add by the end of the day to those. And let me show you a few other, well, let me show you the scenario. So here's a 5-minute chart. So this morning, I told you I reversed, covered the shorts. There's the first resistance level, hit that, and then that's where I got out, pulled back, and bought the pullback because I expect a more upside, at least up to right here. And this is NQ. This is just, again, a 5-minute chart, but I look for these 5-minute divergent lows, and that's going to be the next stop there. I think there's a reaction high there, but I think it'll carry up a little higher to that 12,458 level. Another pullback. We don't have really any divergence. Have a little RSI divergence forming right there. And then the 60-minute chart of NQ, let me give you that. All right, so here's, and I drew it out for you actually this morning. You saw my 60-minute charts I got out to you. There's the uptrend line, as clear as can be, almost too obvious. And we broke it, and we fell to it yesterday, and we also fell to support, and then we took it out last night. And now this is a back test. So at minimum, there it is. I mean, you could, if you game the bounce, if you covered shorts this morning reverse, that's pretty big resistance and will probably get rejected there. But I suspect they might just pop that because you're going to have a lot of people shorting that back test. If I were the, ran my own giant trading desk with unlimited funds, I would gun it through there to pop all the stops for the shorts that they'll cover. And then, it'd be long through that, and then ramp it up to here, and that's about when most of the shorts would be squeezed out. The active traders I'm talking about, and swing traders as well, but and then take it up there. So that would be a nice scenario, and it would be even nicer. It'd be ugly if you're short, but I'm open to it. Is come on right on through there, and then go in, because the one thing lacking for me. On calling a major top that I want to position really short for the next leg down to take out the downtrend lines is a divergent high on the 60-minute chart. We don't have that, haven't had that. I had some RSI divergence here, and that's what it says, DH3, divergent high 3, a little divergent high 1, 2, 3, but only on the RSI, not on the PPO. So it would look something like this. If we rallied up, took out that previous high, the shorts would just be blown out of the water. Short interest would be nil. That whole VIX breakout, again, it was almost too perfect yesterday. It just doesn't feel right for me. Do that, blow a lot of short interest out, which is what you need for a bigger drop. put in the a nice divergent high here on the 60-minute chart of NQ. Let's look at ES real quick. ES was another reason I covered this morning. ES hit support at the lows. I had a trend line right here and horizontal support. So that's one more reason. There's the downtrend line in ES, and we're at resistance right now. So this is quote unquote where the sellers should be stepping in, and if they don't, then there's something wrong. They've been overwhelmed by the buyers. You can see back testing on SPY right now, QQQ, just below the trend line right there. And so the same thing on ES. If they can pop it up, they could put us, give us a nice divergent eye. Let me look at the QQQ and QQQ and SPY 60-minute charts. See, no divergence yet, and that's what it would look like on QQQ if we can get that. Ramp up here, blow out a lot of shorts, suck in so many, new longs. Last of the, dry powder would be deployed on the longs, then put in a divergent high in reverse. We may not get that. Let me tell you, especially in the stock market, we don't always get what we want, right? So it is a scenario that one possible scenario. I'll tell you, it's counter trend. It's not a very probable scenario because we have broken down and we haven't regained those trend lines. I'm looking 3 steps ahead to something that hasn't happened, and by most accounts shouldn't happen because these breakdowns are clear. Remember, the VIX broke out yesterday, and not just a little breakout, by a solid breakout. This is 60-minute chart of the VIX here. This one's a 15-minute delay on it, but it ran right into resistance here at 21.59. But the breakout, it's clear, but it's, again, I don't know, maybe it's just me. Maybe it's instinct, almost too obvious. Look at that. VIX broke out, solid breakout. That's not, did we break out? Are we close enough to the trend line? No, that was an unmistakable breakout. Blind man could see that breakout. It's so clear. But again, I don't know. Maybe we'll come in and back test the VIX, or fall back test the trend line or something like that. Let me show you the real-time chart. Just see if volatility should be melting off now if the stocks rally. Start there it is. So we have a little, this is a real-time chart, 120-minute chart of the VIX. There's a reaction high, some resistance right here. You have pop. Yep, got enough levels here, and that's resistance on the VIX. So that would be, pull back to at least that uptrend line, maybe here, would coincide with a rally in the stock market. Okay, other than that, this is maybe the real deal. I'm going to wrap the video up by just showing you everything that I'm tracking. Okay, so look at the PPO crossovers here. Let me just go to my clean board. There's QQQQ. Again, that crossover, whether it happens today or next week, appears likely to happen very soon. Sometimes the lines kiss, bounce, but you're at a very high level. Remember, we're coming off overbought conditions on the RSI. Last time we were overbought with the bearish PPO crossover was there. PPO crossover close to overbought. So if we do get that little head fake scenario, maybe the lines bounce, and then next week or so, especially, and it could take a little, could take a week. I would say it would be next week. Run up another run at my most likely bounce target zone, maybe take out those previous highs, maybe even fall a little shy of that. You don't have to have the positive divergence or negative divergence there, but I did want to point out there are a lot of reasons to be short right now. So it's certainly not a time to be aggressively long. And like I said, I'm sticking with the swing short positions I started to scale into. I'll ride out any bumps up, and I'll actually use that to add. I'm going to add to my swing short positions whether I get another thrust up, a little fake out move here, or whether we just melt down today and close, big red candle today, big negative close today. Then I think that's also worth adding on, because this whole little whipsaw scenario probably won't play out then. We'll probably gap down big on Monday. But look at all these crossovers. Boom, boom, boom. This one, that's S&P 500. SPY, there's IWM, bearish crossover. Looks like it's already happened right now on IWM. And go through all the sectors, tech being the most important by far. Boom. Last time we had the bearish crossover right there. There's an example of when if you look really close, when it looked imminent, see that right there, and they kissed. And then you had a big up. See that little false? That's exactly what I'm talking about right now, what we could see on the markets. I'll zoom into that time period right there. So you look at the crossover, looked imminent, just like it looked imminent there, but it didn't happen. The lines kissed and they bounced. And those that shorted in anticipation of a bearish PPO crossover, it never came. They got smoked. They got squeezed out. And then right there, they probably, depending on how heavy you were, where your stops are, if you're a swing trader or trend trader with wider stops, or an active trader that goes pretty heavy in positions, if you tried to short what appeared to be an imminent crossover there, that big green candle smoked you, cleared out the short interest, and you stayed above it, and you went even higher. So if you didn't get squeezed out on that, you probably got squeezed out on that. But then right when they squeezed out the masses, see, that's what I'm talking about here. That's that little fake head fake move. And then the real deal came. There was a bearish PPO crossover. There was that last, gasp up in the market, tested the 200-day moving averages, and the PPO looked like it was going to make a bullish cross on that, but never did. Got rejected, stayed there, and we didn't get the bullish cross to right there, and that's when you wanted to go long. Again, you could simply trade the PPO crossovers, or at least you could have over last year, and you would have vastly outperformed the market just using this. So again, the takeaway from what I said earlier, that's been working really well. And when it tends to work well too, as I've always said this, is during a market that has these pretty clear what I call micro trends, these up and down trends, and you have clean separation on the PPO. Stay away from using PPO and MACD crossovers in a sideways trading or a consolidating market when the lines are flattened out. See, there's choppiness right as we were topping at the end of 2021 when the market was topping, boom, 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 boom. You didn't have any clear signals. You would have got whipped to pieces. It's once the bear market started and we had these nice micro trends or swings down with the counter trend rallies. Okay, so that's that. No crossover yet, and maybe it's going to come. It appears likely and imminent soon, but again, imminent could be, instead of today or tomorrow, it could be a week or two. Probably within there, sometime within that time frame. So maybe they just want to suck in a little. Well, I have no doubt they sucked in some shorts yesterday, and especially on the gap down today below all the trend lines and everything else. And so far they're buying it since buying up the open. XLV, we can go through them all, but that wasn't the point of this. There are a lot of crossovers and divergence. I mean, this is a clearly bearish chart. Just like the indexes, but more so XLF Financial is one of my favorite on the short side. I've shared my favorites, the semis, SOXX. Again, whether we get the crossover now or soon, there's a little breakdown candle. Well, actually, you're right. You're still holding support, so not yet time to aggressively. You can when I roll it, you can see the line moves, and if I have to do that, I'm going to say that's not a clear breakdown, and it could prove to be a whipsaw. So, and look, if the Qs are going to go up, especially if they're going to pop that previous high, the semis are probably going to do it as well. So, I still like this trade, but it's not an all-in moment for me yet. I'm going to like it if we can get another thrust up. And again, just wash out a lot of the those that maybe jumped in short yesterday and today, because I like being a lone wolf on the short side. I do not like it when everyone agrees with me, when the folks on TV agree with me, when everyone on the website and the comments section agrees, because then I know everybody's short, and the one thing that keeps the stock or the market from going down is high short interest, because shorts are the only guaranteed buyers. When you short a stock, you must at some point cover that position, and when you cover it, you're buying the stock. So, and anything, I love trading short squeezes. A lot of people use that as their primary trading strategy. They look for the high short interest stocks. That's what the apes did, a couple of years ago with AMC and GameStop. The fundamentals were abysmal in those companies, but the hedge funds, some big hedge funds were heavily short, and the Reddit groups kind of banded together and they bought a stock, or several stocks. They did it on quite a few, and they had explosive gains because they forced those short positions to be covered due to big losses. So anywho, it's a lot nicer. You're going to see the big drops in the market come when there's very little short interest. So we may be there now. Short interest, unfortunately, is not available in real time, at least not to you or I. It's only published twice a month, and then when they publish it, it's 10 days dated by the time the dissemination date, the reporting date is. I'm sorry, on the short interest. So you kind of have to extrapolate, and that's what I'm doing here. Okay, I already got a post out to you on gold and silver. Again, to me, it's just playing it safe. Cover those positions, even though there's, I think, more downside to come. We have the divergences, and sometimes, divergences either don't pan out in a downtrend, or they can become larger like this. Gold may take one more jog down. There's that really good support. That was a level I was targeting, but we get close enough, and with the divergences, that's just me being safe and just reining in some profits. And the risk reward is not that favorable to try to eke out that last, 0.5%, 0.75%, and risk getting caught in a sudden move up there. So when I see positive divergences on gold and silver like that, especially in a larger, remember the bigger picture is a larger, more powerful uptrend. Here's a 2-hour chart. There's the trend line. This is what got us short recently. Break of the trend line, and then that price support level, and then that level. That was really the all-in right there. A little flagging type action, but we also had a little small bear flag right there. That already played out. And there you can see the divergence here on the 2-hour chart. And then just to wrap it up, I still diversified with some select commodities. I'm still holding on some natural gas, waiting to add. We don't have a clear move, and what I'm really liking, and have been for a while, they're starting to move today, but can't say they're exploding. But that wheat trade, and some of the other grains, but particularly wheat's one of my favorites. Look at that. That's a big level right there, in my opinion. About $8. We're right there now. Remember, the basis for this was the lot of reasons. First and foremost, it's in I believe, early stage. This was a correction in an early stage bull market that began back here about the time COVID hit, with all other commodities bottoming around then, and moving up. And then you had just a beautiful bullish falling wedge pattern here, and strong positive divergences. You had a divergent low there. We caught it, rallied, and then wheat went on to make a marginal new low, but it was still even bigger divergences. And now, like I said, took out the trend line, kind of floundered around for a bit, starting to move more impulsively today at resistance. If we can pop that $8 level, it should run. Let me show you the chart of wheat futures. ZW, here it is. So a little more upside to go to before the next reaction here. Next target 7.99 3/4. Probably get a reaction there. But again, I'm looking at this and a lot of these other commodities is probably good times to start getting back into them for the next leg up. In my whole working theory about that vicious cycle or negative feedback loop between inflation and the stock market, we're going to look for periods, get ahead of it, where it looks like we're going to get an abatement in inflation, really, i.e., a correction in commodity prices and other things. Look at interest rates. Then the market rallies, saying that the Fed is done and they see the end and rates coming. So you'll get the tech stocks rally. We'll catch those rallies and we'll get out, and then get ready to short the market for the next leg up once the commodity bull, starts its next leg up. And so we're seeing it. Again, one day doesn't make a trend, but what does make a trend is something starting to go up and making higher highs and higher lows, or try to identify those trends before they even begin by looking at things like divergences and pullbacks, Fibonacci retracements, and all that other stuff. So there it is. And again, at the end of the day, you trade diversified. One day your wheat's down, but you're short on the stock market's up, or you're whatever else, treasury bonds. And like I say, diversification within trading, even active trading, to me is just as important as it is with investing, long-term investing. Don't put all your eggs in one basket. Diversify among different equities within your equity allocations, and diversify among different asset classes: stocks, bonds, commodities, gold. And then, and if you can, don't just run a pure long equity portion in your portfolio. Be flexible. Short the most bearish sectors or stocks, and go long the most bullish. All right, we'll wrap it up here and see what happens today. I will definitely update you throughout the day, see what happens. This has been Randy Finney with Right Side of the Chart. Have a great day.